All right, let's get right into it. Today we're going to tackle a huge question. How in the world do you actually analyze a stock? We're going to break down the three major schools of thought that the pros use, giving you a powerful framework, a new toolkit for your own investing. Okay, let's do this.
So here's the big question, right? It's what every single investor faces. You open up your brokerage app, you see this endless sea of tickers and charts, and it could feel completely overwhelming. I mean, where do you even start? What actually matters? It's a real challenge, for sure. But lucky for us, there are some proven methods to bring a little order to all that chaos.
That's right. Instead of some single correct way to analyze a stack, there are really three distinct philosophies, three different lenses you can look through. And each one asks totally different questions and looks for completely different clues to find opportunities in the market.
So here's how we're going to break it down. We're going to look at these approaches through three different personalities. First, we'll meet the detective, who is all about finding a company's true hidden value. Then, we've got the trend spotter, who's an expert at reading the market's mood. And finally, we'll meet the scientist, who only trusts the data. And then, we'll wrap it all up by showing you how to assemble the whole team into one powerful strategy. Okay, first up, let's talk about the detective. The detective's mission is pretty straightforward. Uncover a company's true, underlying worth. They are not swayed by hype or what's trendy on social media. They are hunting for cold, hard facts about the business itself. Now, the detective's official job title is a fundamental analyst, and their whole goal is to figure out a stock's intrinsic value. Think of it like this. If a stock is trading for, say, $50 a share, the detective wants to know if the business behind that stock is actually worth $70, which would make it a total bargain, or maybe it's only worth $30, which would make it way overpriced.
So how do they do it? Well, this is the detective's toolkit. They are digging through financial statements, looking at earnings, judging the quality of the company's leadership team, and analyzing the whole industry. They're basically asking one big question. Is this a fantastic business that I actually want to own a piece of for years to come?
Okay, now for a complete 180. Let's meet our second personality, the trend spotter. Now this investor, they could not care less about earnings reports or who the CEO is. They believe that absolutely everything you need to know is already baked right into a stock's price and how it's trading.
The trend spotter's method is called technical analysis. And what's so fascinating here is the complete shift in focus. It's all about market activity. So instead of asking why a stock is a good investment, the technician asks when is the right time to buy or sell, based on what the charts are telling them about the market's mood.
So, as you can imagine, their toolkit looks totally different. It's all about charts, charts, and more charts. They're looking for repeating price patterns, they're watching for big spikes in trading volume, and they use indicators like moving averages to figure out momentum. The whole game is based on the belief that history tends to repeat itself, which makes this approach super popular for shorter-term trading. And that brings us to our third and final archetype, the scientist. The scientist trusts data, math, and models above everything else. Their goal is to remove human emotion and bias from the investment process completely by building a systematic, data-driven system.
This approach is known as quantitative analysis, or just quant for short. And it is all about using mathematical models and fancy statistics to find an edge in the market. Quants use really powerful computers to scan thousands of stocks for opportunities that fit their pre-programmed rules, and then they often execute trades automatically.
You know, the Scientist Lab is filled with algorithms, backtesting software, and a whole lot of statistical analysis. This is a super sophisticated approach, the kind of thing you see at big hedge funds. But what makes it so powerful is that their models can actually pull in data from both the detective and the trend spotter to create their trading rules.
Okay, so let's just put it all together here, side by side. You've got the detective, focused on intrinsic value, looking for undervalued companies for the long term. Then you have the trend spotter, looking at price and volume to predict the next move, which is great for short-term trading. And finally, the scientist, using data and models to find systematic opportunities, perfect for algorithmic trading. Three very different paths, all leading to the same destination.
This slide really gets to the heart of the difference, especially between the two most common approaches. The detective is asking, what should this company be worth? As if they're searching for some objective, fundamental truth. Meanwhile, the trend spotter asks, what is the market saying the stock is worth? They're just trying to read the subjective mood of the crowd. It's a completely different mindset.
So, after all that, you're probably wondering, okay, which one is the best? Well, here's the secret. The smartest investors know you don't actually have to choose one.
The real power comes when you assemble your own team and learn how to use these approaches together. They are not mutually exclusive at all.
Here's a super common and really powerful way to do it. You start with the detective. Step 1, you do your homework. You find a financially rock-solid company you really believe in for the long haul. Then, and this is step 2, you bring in the trend spotter. You look at the chart to help you find a good time to get in, maybe after the price has dipped a bit, or just as it's starting to show some positive momentum.
And that's really the crucial point here. Thinking like a great investor means having a flexible toolkit. It's about understanding that fundamental, technical, and quantitative analysis are all just different lenses you can use to look at the market. Knowing which tool to pull out for the right job, that's the real skill.
And that brings us to our final question, and this one's for you to think about. Based on everything we just covered, which one of these archetypes do you think naturally fits your personality? Are you more of a detail-oriented detective, a pattern-seeking trend spotter, or maybe a data-driven scientist? You know, just understanding your own style is the very first step to building a strategy that's actually going to work for you.